Picture a room full of people, and every single one of them owes money to someone else in that same room. No one has cash in their pocket. Everyone's holding a slip of paper that says, "You owe me." Now zoom out. That room is the entire planet. The United States owes tens of trillions of dollars. So does Japan. So does nearly every country in the European Union. China, despite being the world's factory floor, carries a mountain of debt too. Even nations sitting on oceans of oil are borrowing money. So here's the question that should keep you up at night. If literally everyone on Earth is in debt, who on Earth is holding all the IOUs? Stick around, because the answer is stranger and more revealing than you'd expect. To understand who's owed all this money, we first have to understand why nations borrow at all. Long before spreadsheets and stock tickers, kings borrowed to fight wars. A monarch with an empty treasury but an army to feed had one option: convince wealthy merchants to lend him gold and promise to pay it back with interest, guaranteed by future tax revenue. That simple bargain, sold in the late 1600s to fund a war effort, gave rise to one of the most important financial inventions in history: the tradable government bond. Almost overnight, borrowing stopped being shameful and became strategic. A government that could borrow money was a government the world trusted. Other nations copied the model. Merchant lenders became bond markets. Bond markets became the backbone of empire building, because now you didn't need to physically conquer land to profit from it. You just needed to hold its debt. Fast forward to today, and that centuries-old trick has scaled into something almost incomprehensible. Global debt, combining governments, corporations, and households, has ballooned past $300 trillion. That's not just larger than the world economy. It's close to 3 times larger. So the practice that started as a wartime emergency measure has become the permanent operating system of the modern economy. Let's use the United States as our case study, because its debt load gets the most headlines and the most misunderstanding. A huge portion of U.S. government debt isn't owed to some foreign power waiting to call in the loan. It's owed to Americans, domestic banks, insurance companies, pension funds, mutual funds, and the Federal Reserve itself hold the majority of it. Retirement accounts across the country are quietly stuffed with government bonds because they're considered one of the safest investments on the planet. Only a minority of the debt sits overseas. Japan holds a significant chunk. China holds a smaller amount than most people assume. Enough to matter, not enough to control anything. A handful of other nations round out the list. So when you hear the claim that we owe everything to China, that's a dramatic oversimplification. Most of America's debt is owed to America. Taxpayers fund the interest payments, and much of that interest flows right back into American pension funds and savings accounts. It's less a foreign takeover and more a closed loop, a system that largely pays itself. Here's where it gets genuinely wild. This circular pattern isn't unique to the United States. It happens everywhere, all the time, all at once. Japan buys American debt. The U.S. funds international institutions that lend to European nations. Europe channels aid and loans toward developing economies. And developing economies, in turn, often store their own savings in the bonds of wealthy nations, the very countries lending to them in the first place. It's a loop with no clear starting point and no clear ending point. Everyone is simultaneously a borrower and a lender. Think of it like a group of friends who've all borrowed $20 from each other at some point. Technically, money is owed in every direction, but if you tried to actually collect on all of it at once, the entire friend group would implode. That's the global financial system in a nutshell. Nobody wants to be the one who suddenly demands repayment, because doing so would collapse the very structure that keeps their own assets valuable. But there's a layer above governments and citizens, the institutions that actually set the terms of the game: investment funds, insurance giants, and central banks. These players collectively control staggering amounts of capital, and they decide in practice which countries get to borrow cheaply and which ones get punished with sky-high interest rates. When these institutions lose confidence in a country's ability to manage its debt, the consequences are immediate. Currencies weaken, borrowing costs spike, and governments can be forced into painful policy reversals almost overnight. And sitting above even the private markets are the central banks, the Federal Reserve, the European Central Bank, and their counterparts around the world. When a central bank buys government bonds, it's effectively creating new money in exchange for that debt, which means, in a very real sense, modern currency itself is manufactured out of borrowing. There's no pile of gold sitting in a vault backing the money in your wallet. There's a chain of promises. This entire system runs on one fragile ingredient: confidence. As long as lenders believe a government will keep making interest payments, the machine hums along smoothly. But when that belief cracks, things fall apart fast. We've watched it happen. A European nation's debt crisis in the early 2010s triggered panic among bondholders, sent borrowing costs soaring, and forced an emergency intervention, followed by years of austerity, layoffs, and public backlash. A South American country has cycled through debt default after debt default, turning borrowing into a recurring national trauma. And an island nation in South Asia ran so low on foreign currency that it couldn't even import enough fuel, triggering a full-blown economic and political collapse. In every one of these cases, the moment confidence disappeared, the invisible creditors suddenly became very visible. international lenders, rating agencies, and bondholders dictating terms to entire nations. And yet, even after a collapse, the same pattern always restarts. Old debt gets restructured. New loans replace old ones. The cycle resets. Here's the part that surprises most people. Modern governments don't actually intend to fully repay their debt, ever. And that's not some hidden conspiracy. It's simply how the system is designed to function. When an individual takes out a loan, the expectation is repayment of the full amount. Governments operate on a completely different logic. They continuously issue new debt to pay off maturing old debt, a practice called refinancing. The goal isn't elimination, it's manageability. Interest becomes the ongoing cost of maintaining the system, almost like rent paid for economic stability. And counterintuitively, the world actually needs governments to keep borrowing. Government bonds are treated as one of the safest assets in existence. Banks use them as collateral. Pension funds rely on them for predictable returns. And central banks treat them as a foundation for monetary policy. If a major economy tried to pay off its entire debt overnight, it would drain a massive amount of safe assets out of the global financial system, likely triggering a severe economic contraction. So when politicians promise to balance the budget or eliminate the debt, they're often describing a goal the system isn't actually built to achieve. In some respects, isn't designed to want. So back to our original question, who's the creditor? The honest answer is, mostly, we owe it to ourselves. Citizens lend to their own governments through savings, pensions, and taxes. Nations lend to each other in overlapping, interconnected loops. And the interest generated by all of this doesn't vanish. It flows upward, disproportionately benefiting the institutions and investors that already hold the debt, while ordinary taxpayers foot much of the bill. That's the uncomfortable twist. Debt isn't just a transaction between nations. It's also a quiet transfer of wealth between different levels of society, scaled up to a planetary size. There's no single villain sitting at the top of this pyramid pulling the strings. It's a distributed system. Governments, banks, investors, and citizens, all locked into the same interconnected machine, each one simultaneously a borrower and a lender. Debt used to symbolize failure. Today, it's simply the operating system of the global economy, a vast, rolling structure of promises that only works as long as everyone keeps believing in it. And that's the real question worth sitting with. Not whether the debt will ever be paid off, but how long the world can keep believing it will be. If this changed how you think about the global economy, make sure to subscribe. There's a lot more history hiding behind the headlines.